Stick around if you want to see how I had my biggest month in dividend history. What's up, everybody? My name's Christian Robert. On this channel, I like to share my stocks and all things related. As always, make sure you subscribe and like the video if you haven't already. But let's get right into this one. As you can see, my account is currently sitting at $184,000. A 1 week chart shows we are up a little bit with a low of 169,000. A 1 month chart will show that we started the month off around 185, so we're pretty much flat. We had that low, we had a low of 153. A 3 month chart, we had starting out at around 198,000, same low. And if we jump right into a year, because we are pretty much 1 year since the big pandemic started. So 1 year ago, we were a little lower than this, but April 2nd, we were sitting at $37,000. So, I mean, I'm still up about 150 grand, even though we had a high of 232 or so. So, yeah, I'm not at the all-time high, but, you know, I could not have asked for a better year in the stock market. I took some chances. Obviously, Tesla is a huge factor in all of this, but I cannot say that if I could go back, I would change anything or do anything differently. But let's jump right into the holdings. So as always, the top holding is my 200 shares of Tesla. Current price is around $6.58. My average cost per share is $91.37. We are down a good chunk since the all-time highs of around 900, but after a blowout of a Q1 delivery, I think 700 would not be surprising next week, but that is just my personal opinion. We are still up 624% or $114,000, so I cannot complain at all. I will share with you my M1 in a bit, and you will see how I am doing with Tesla in that. But the big change in the portfolio is now that I have 910 shares of QYLD. This is going to be a love it or hate it type of thing for the people watching. It is an 11.51% dividend payer. I've owned this one. I've owned 300 shares or so for a while now, kind of as testing it out a little bit. But the reason I added so much more to this is because I sold out of Walgreens for a 5 or 6% profit. The reason I sold out of Walgreens was because I knew it was way undervalued, but I got into it a little bit late. I threw a big chunk at it, around $20,000, which I don't typically do if you look at my portfolio. So I got in a bit too late. I started looking at it in the low 40s, and I just didn't pull the trigger until it was around $49. I think I added a bit more to it at 47, but I really wanted to try out a short-term play on that, and it did work out. I could have made a lot more, but I didn't pull the trigger fast enough. So I sold that one off because it wasn't a stock I bought with the intentions of holding long term, and I added QYLD. This will bring me in just about $200 every single month. So I will not be adding to this one anymore. This is just a pure dividend play for me now. People are going to say, oh, what if it goes down a lot? That's perfectly fine as long as they can somewhat maintain the dividend. I don't expect it to be this high all the time, but even if they cut it in half, I'm still bringing in $100 a month, so I cannot complain. And then the only other change to the portfolio would be ARKX, which is the new ARK Space ETF. I know that this doesn't have anything to do with dividends, but I just wanted to share my portfolio with you. Simply the reason I bought this is that I'm a big fan and believer of Cathie Wood, so anything she does, I want to be a part of it. So I really wanted to just buy 50 shares on its IPO day. So we are already up 3%. This is kind of just a leave it or a buy it and forget it type of play. It'll be fun for me to kind of see how it goes year after year since I got in from the very beginning. And so yeah, that's all the changes with the portfolio pretty much. Let's get into the dividends. So here we are looking at the dividends I brought in. I'm not going to go through every one because this was one of those months where I brought in a lot. But the first big one is $69.99 from QYLD, and this is when I still only owned the 300 or so shares. So this will be a really big staple moving forward in the dividend with that 200 a month. $9 from Starbucks, a couple bucks from J&J, $6 from AGNC. The bigger ones are 1684 from IBM. I did qualify for the last Walgreens dividend, so I brought in $187. $74.55 from 3M. $30.82 from O Realty Income. The only two stocks I have on drip currently are O and Maine, and I brought in $10.79 from that. The few other big ones are 1970 from Qualcomm, 1432 from Raytheon, 6716 again from QYLD, 3637 from AVGO, which is Broadcom, 2147 from SPHD, last one 426 from Public Storage. And so the moment you've been waiting for, my biggest month ever, I brought in $598.32. So that is insane for me. I never even imagined bringing in that much in a single month for dividends. So I'm really excited about that. So that currently brings the year to date total for dividends at $1,321.86. So we are well on our way to have the biggest dividend year I've ever had. And something I didn't mention earlier in the video, but I know I talk a lot about Tesla on the channel, even though when I first started this channel, I was all about dividend investing. And with everything that's happened in the last year and all this craziness with growth stocks and meme stocks like GameStop and AMC and all that, I really realized that I got to get back to my roots, focus on my dividends a bit more, because as exciting as Tesla is to me, that's my favorite thing in the world right now. But as exciting as all that is, I still 100% truly believe that dividend investing is the way to go, especially if that's how you want to retire. I want to be able to bring in enough money just off my dividends to cover all of my expenses as fast as possible. So with a big month like 598, that really makes me realize, if I keep this up, it is possible, because if I can bring in $2,500 to $3,000 a month in dividends, then I can live off of that. I can pay my bills. I'm not saying I will be a beach bum, because that's not me. I'll still be working in some form or another, but to have that financial freedom, to not be a burden to a paycheck, that is what we should all strive for, in my personal opinion. Lastly, I just wanted to share my M1 finance portfolio so I didn't have to do a separate video about it. But we hit a new milestone of $40,410. If we look at a 1 week chart, we were at $37,000. A 1 month chart, we were at $31,000, and then 3 months ago we were sitting at $6,400. If we look at a 1 year chart, this account was non-existent. In April, it was $150. It looks like here it was at $61 in September, and then right around Christmas, I threw a big chunk in there. I can't remember if that was tax return money or what, but then once I threw that first chunk back in, because I got that itch to start a new account, and I started setting milestones or goals for myself, because with my main portfolio, I kind of reached a point where it's still a lot of fun growing it, obviously, but when you add 10% of your paycheck to that, it doesn't really make any big moves, because it's regardless how much money I add on a weekly basis, my account moves basically how Tesla moves. So I kind of wanted to start fresh. So I started really grinding out this account and trying to get to $50,000 as fast as possible. I made a video about how, the goal was to get to 50 grand as fast as possible, and what would I do when I got there? Maybe I buy the Cybertruck. a lot of you guys did not seem to like that idea very much, which in all honesty I probably would never sell off a portfolio just to buy any type of car. But let's take a quick look at this portfolio. It's even more simplified than last time if you saw it. I believe last time I owned PBW and I got rid of that. I just realized I just want to keep buying Tesla, so I just kept piling money into Tesla. So if we click on Tesla, you can see that I now own 50.17 shares with an average price of $741 because I was buying at that high price of around $800 to $900. I have 37,225 of my own dollars into this. Current value is around $33,000. As you can see right here, Tesla Q1 vehicles deliver soared, crushing expectations. I expect to be breaking even on this by the end of the month. That is just my bullish prediction. But looking back at the portfolio, nothing else has changed. I still have my ARC-G. I still think that this is behind Tesla. This is the second best future stock you should own with a lot of growth potential in my personal opinion. So I have 59 shares of this. I'd love to get to 100. I mentioned earlier I have 6,100 of my own dollars in this. Current value is around $5,200. Average price 103, current price 89. So at least buying this one, I'm lowering my cost basis. Other than that, I have my QYLD because I just love it so much. This brings me in around $7 a month, I believe. Aggressive dividends, which is just a cluster of REITs. IPOE, which will become SoFi. I'm pretty bullish on this one, but I just can't stop buying Tesla in this account yet. If I was kind of at a point where I could confidently say, okay, now is definitely the time to stop buying Tesla because the price, it's a fair price. Then I can definitely see in this account starting to pile a lot more money into IPOE and Tattooed Chef. I love these two companies, but I don't want to make this video too long. The one thing I will say is that the most amount of comments I got in this previous video about the whole $50,000 challenge was REITs first real estate. So I'm not quite sure if that meant you want me to kind of do a challenge on if I got a rental property and compare it to some of the REITs I own or what. But who knows? Maybe when I get to 50 grand, I can really consider trying to start looking at rental properties and take you guys along with me, and maybe we buy something. Comment down below what you guys think of that, but I will see you guys in the next one.